The Indian auto sector has been stuck in the mud for months now, and while it hits the automakers the hardest, the entire ecosystem takes a hit. Insurers are no exception, and with auto being one of the biggest verticals, it's bound to reflect on the numbers of almost all of the non-life insurance players as well. SBI General Insurance's head of underwriting and reinsurance, Mr. Subramanyam Brahmajosyula, joins us right now to talk about this in greater detail. And what does this typically lead to? How do these cycles pan out for insurance players as well? Mr. Brahmajosyula, thanks so much for joining in. Appreciate you taking the time out. Now, I believe that the play for an insurance player would be slightly different than the other allied auto players, simply because you may not need spare parts every year. You may not need to buy the car every year, but you need to do the insurance almost every year. However, the slowdown would have a hit, as the numbers are showing too. How would you read into this situation, sir?
Thank you, Neeraj, first of all, for having me on the program. And you're absolutely right. I think any slowdown in the auto sector will clearly have an impact on the insurance industry as well. I mean, just to give you some ballpark numbers, last year the non-life insurance industry was worth generated revenues of about 1.5 lakh crores, of which approximately 65,000 crores came from motor. So it is by far the largest segment. And therefore any slowdown in the auto sector will certainly impact us as well. Having said that, you're right, some advantages which our industry has would be the fact that, first of all, motor insurance, especially the third party part of it, is mandatory. Therefore you cannot ply your vehicle on the road without insurance. And secondly, as you mentioned, while allied issues like spare parts, etc., can see a downturn, you do need to have an insurance policy every year. Now, of course, the regulator has given the option of having long-term policies as well, especially for the third-party liability. However, the impact, I think, will not be directly felt by us compared to the automobile sector as such. But it has certainly had an impact. As I said, 45% of your revenues, if that sector is showing a slowdown, it's a source of concern for us.
Would you have some insights into how and when this could change, if it would change? I mean, we hear number of examples. Somebody saying that because the millennial wants to see Netflix and Amazon Prime on his phone, he's not buying the car, going in an Ola, Uber, and therefore car sales have gone down. Car ownership in general is a lot more expensive now. People don't bother about fuel costs as much as parking costs, and therefore car ownership is also going down. Are all of these trends are playing into this? But is there some insight that you have about how long could this last? What's the impact therefore on your premium, since it's 35% of the overall book, and what could change this?
I don't necessarily believe, Neeraj, that millennials are any less aspirational in terms of wanting to own a car. I'm sure many of them would certainly like to own a two-wheeler or a car. Having said that, let's bear in mind that prior to this slowdown which we've been witnessing for the past 15 months or more in the automobile sector, we've had almost 7 to 8 years of uninterrupted growth, which is also, I'd say equally unusual. It's not something which you see in the automobile sector all the time. So to some extent, you can say that what's happening now is a sort of a course correction, because as the inventory keeps piling up, the automobile manufacturers are taking steps to cut down on production. In terms of, do I see an upturn? Not immediately, as in not something happening which is the next 2 or 3 months. But I would say during the Dussehra Diwali season, let's say October, November, which is traditionally when automobile sales pick up in India, we can expect to see an uptick there as well. So that will benefit us directly. And also, the sort of drastic drops we saw in April and May, where car sales were down by 15 to 20%. Those kind of steep falls may not be seen in the next few months. And as I said, I expect to see an uptick post, say, Q3 onwards this financial year.
Okay. You said Q3 onwards. I mean, would that be something where you feel that probably growth will come back on track in line with what we saw before the slowdown, or that it'll start off from the bottom and then you'll still have to see a gradual uptick from there?
I would expect to see a gradual upswing because this is not an area where you can expect things to be, the status quo ante to be restored almost on day one. So this is likely to be a gradual process. So if I'm talking about upswing being seen in Q3, probably by the end of Q4, say March, April 2020, we could perhaps see the automobile sector as well as the insurance industry premiums going back to the levels that they were in, let's say a year or so ago.
I'm just reading from a brokerage report which suggests motor insurance premiums are likely to be under pressure given the slowdown in new vehicle sales, which we've spoken about, and own damage cover approaching renewal. Could you explain that for us?
Yeah, so as far as own damage is concerned, last year in September, the regulator made it mandatory for all new vehicle owners, new car and new two-wheeler owners to opt for a long-term third-party policy. Now, effective September of this year, the regulator has also given customers the opportunity of taking a standalone own damage cover. In the past, you could always avail only a package policy covering both own damage as well as third party. Effective 1st September, new vehicle owners have the option of choosing, say, company A for own damage and company B for third party. And your observation that own damage premiums could come under pressure, this I think is something we anticipate. The reason is that traditionally the own damage part of a motor policy has been more profitable for insurers compared to the third party segment. Accordingly, we do expect to see some competition in this segment because, as I said, the customer now has the option of taking a standalone own damage cover. Hence, pricing is likely to come under pressure.
Okay, by how much, sir? I mean, is it possible to envisage that whether pricing will see a really big drop or would it be marginal at best, or at worst rather?
My guess would be around 5 to 10%. So the price drop may not be very significant, but customers can expect to benefit because of this move by the insurance regulator.
Okay. I just get back to the overall larger picture, Mr. Subramanyam. The gross underwriting, which is on a month-on-month basis, shown a significant drop in the month of May. Those are the numbers that we have. The month of May, for SBI General as well, it was about a 38% drop. For the others too, New India 40%, ICICI about 29%. So nobody was left alone. The question is, would these numbers continue to show a downtick in the near future until some catalyst emerges, which we may not be able to see right now, but which may come later on? But until then, would these numbers continue to show these drops?
My view, Neeraj, is that as far as auto insurance itself is concerned, premiums will continue to be under pressure. Having said that, one of the positive features for us in the non-life industry over the past few years is that we are no longer solely reliant on motor insurance to drive growth. The CAGR of the non-life industry over the past few years in India has been around 13 to 15%. And even this year, we've seen a growth of about 10% YTD May. I don't have the numbers till June yet. So the industry continues to grow, and there are other lines of business like, say, health, crop, etc., which are also driving the growth. Hence, while, as I said, a big chunk of our business, over 40%, comes from motor, it's a source of concern for us that the revenues are either stagnant or falling. I think in the long term, and in this context, long term to me means maybe as early as the end of this financial year, we can expect to see the industry bounce back and provide healthy levels of growth in line with what we've seen in the past. For us, just to give you an example, YTD June, in spite of the slowdown in motor, we grew by about 26%, thanks largely due to growth in other lines of business.
Yeah, that's pretty heartening. Actually, before we wrap this call, at least final question from Mai and Mr. Subramanyam. Can you tell us what within that space is looking the most exciting? I was speaking to Chola and they were saying that, and they were talking about how Mediclaim or health insurance is arguably one of the fastest growing segment in their mind for the next 5 years. Would you second that, or would you believe there are some other buckets as well which have the potential to show some exponential growth?
Well, I would absolutely second and third that, because I think health is a huge opportunity for the insurance industry. And we are talking not only about, the number of untapped customers on the retail health segment. If you look at the initiatives being taken by the government of India by way of the Ayushman Bharat scheme, which is extremely ambitious, it's already shown a huge uptick for us in terms of premiums, and we can expect this to continue in the future as well. So certainly health is an area of growth. I would also feel that, for example, the SME segment on the commercial side, there are a huge number of SME units in India which are currently either completely not insured or perhaps underinsured. I think they present an opportunity for the non-life industry to grow. We are seeing an increase in property premiums for the past few months. And in that sense, I think if we can expand the presence of property insurance to the SME segment, that will represent a significant opportunity for growth.
All right, Mr. Subramanyam, it was great chatting with you. Thank you so very much for joining us this morning and being with us.
Thank you. Thank you very much. It's a pleasure.
The indices have not done a whole lot much. They're down about 1/3%. In fact, off the day's highs and probably under the 100-day moving average on the index as well. But it's still a long day to go. You could probably see a recovery from there too. But time now for us to take a very short break. Come back on the other side. We get you a conversation with the management at Sterlite Technologies. Mr. Anupam Jindal, the Group CFO, will be joining us.